So before we get into what a claim looks like, I was asked to talk about claims made coverage and tail coverage. So in essence, what you have, you're typically used to GL policies, and GL policies are occurrence-based. So what that means is that as long as you had insurance at the time of when the claim occurred, you're going to have coverage. So say you had coverage back in 2015 for a general liability policy, and somehow a claim comes up that triggers the GL form from 2015, they'll point to the date of that claim and they'll say, yeah, okay, yes, you were covered during that period and there is coverage. Let's say, however, it was a professional liability policy and it's claims made. And back in 2015, you did your due diligence, you had your insurance, and the pandemic came up in 2020, and you said, hey, I just can't afford professional liability anymore. And you let your policy lapse. And then, as luck would have it, there's a claim that dates back to 2015. Unfortunately, since you let your policy lapse, the claims made trigger stops, and then there's no coverage anymore for anything that happened back in 2015 because you let that policy lapse. So the trick is with claims made, it goes back to the retroactive date. The retroactive date is active until as long as you keep your policy in force, it goes back to that date. But the very time that you let your policy lapse and there's no coverage, all coverage is wiped out. So there's no coverage anymore. So the very important thing is once you have an E&O policy, to keep it going for year after year after year. So that kind of gets into tail coverage. What is that? Tail coverage is another term for extended reporting period. So a lot of times you'll have companies that they're not providing services anymore. This is really popular like for accountants where they'll retire or they'll move on to a different firm. But it takes a few years for like accountants' claims to be discovered. So what this tail coverage allows you to do is report a claim for something that happened before you let the policy expire. So as I said before, once the policy lapses, there's no coverage going backwards. That's it, unless you buy this tail coverage, this extended reporting provision. So it allows you to report a claim from something that happened while you had an active policy. If you don't buy that extended reporting period, you don't have the ability to report that claim. That's what that really is. So that's a 2-minute claims made versus occurrence reporting. Versus occurrence description. We could go on for a little bit for that, but that's just kind of a basic overview of what that is. I hope that helped.